Welcome to the 5th episode of Westbrook's COVID Conversations. Joining us today is Adam Orlin. Adam is the head of Investec for Business. We'll be discussing the newly introduced COVID-19 loan scheme, which was announced earlier today. The loan scheme is a partnership between the South African Reserve Bank, National Treasury, and the Banking Association of South Africa, with an objective of injecting up to 200 billion rand to much-needed SMEs around the country during the time of COVID-19. Adam, thanks so much for joining us.
Sure, pleasure to be here.
Just to start, Adam, can you perhaps give us a brief overview of the scheme and how it works?
Yeah, so I think very early on, after the lockdown was announced, banks and the Reserve Bank and the National Treasury started to get really worried about liquidity because we could see exactly what was going on. It meant that basically there was zero turnover for the month of April, and for many businesses it will also include May, as well as nobody paying anybody, which is a really, really big problem, obviously, as you can imagine. And we need to get liquidity back into the South African economy. A good place to start is actually with the SMEs, which are the lifeblood of the economy. We reckon there are probably about 700 to 900,000 companies in SA that are going to require this kind of assistance. And essentially, the scheme is designed pretty broad and pretty easy to access, and is distributed by all of the major banks. And I'm sure a lot of the other banks the smaller banks will actually join in due course. Essentially, it's designed for any company, whether you have a lending relationship or a transactional relationship with a bank. It specifically excludes state-owned enterprises and individuals. You need to have a turnover of below 300 million rand at a group level, which is measured obviously at a group level, either for your most recent financial year or for the period ending the 29th of February 2020. You need to have an existing relationship with the bank as at the 29th of Feb, which, as I said earlier, is either transactional or lending. You need to be in good standing, or if you're not in good standing, that you are condoned, which means that you have to not owe the bank anything, not be any overdrawn. You need to be registered with SARS. You need to have no existing capacity to borrow, and you need to be in a financial distress as a result of COVID.
What does no existing capacity to borrow mean? Is there a test of a burden of proof on the SME that's applying?
Yeah, so generally, I think that businesses that have existing lending relationships with their banks, if you have some capacity in your GBF, you have to max out the capacity that you have. And then the difference, so probably a lot of businesses will be hybrid. So you'll have some of your own funding if you have it available, and then the balance will be the COVID loan.
So Adam, I'm an SME, I desperately need money, I have no or remaining capacity to borrow. I apply to Investec for this loan and it's granted. How much can I get and what can I use it for?
Yeah, so it's 3 months worth of your OPEX. Your OPEX includes salaries, which is everything to do with the salaries, including your medical aid, your tax, etc. You can apply it to leases. You can apply it to utilities. You can apply it to other operating expenses, and you can apply it to supplier payments. Now, there is a bit of a nuance in the way that the banks are talking about the supplier payments. It's obviously not to be used to settle existing creditors. It's really the nature of this funding is to keep the doors open of your business. So it's to pay your staff. It's very, very important that the staff stay employed, but also to pay for goods which you're going to need to continue to operate within these times. So the banks may push back a little bit in terms of having, we've already seen, we've been open for a couple of the applications. We've already seen guys trying to clear their whole creditors book. It's not to be used, obviously, for that. The idea behind it is that it's used to keep your doors open. So it's used to get new stock. If you've got imports which you need to continue, it covers all of those. So you can pay suppliers, but I think that you just need to be, when you're preparing your application, a little bit cautious. You're not trying to put yourself in a better position where you're switching out one facility to maybe a 5-year kind of term loan.
And Adam, talk us through, just on a high level, the rates and the terms from a repayment perspective.
Sure. So the loan's priced at the prime lending rate. You get a 6-month moratorium on all payments, but interest does roll, and then you get a 5-year term. So it's a 66-month loan. The first 6 months, you have no payment at all. And then you get 5 years. So the idea behind that was that you're taking 3 months of OPEX and we're giving you a chance to recover, because we know that it's not like a car. You can't just switch the economy on immediately. It's going to take some time for the businesses to return to normal. We are already in a depressed environment in South Africa. It could get a little bit worse as a result of COVID. There are going to be job losses, etc. So we're trying to give the SME time to get back and then to make the repayments palatable. But it's part of the test that the bank will do. The bank will actually have a look at if you are able to service. So they'll look if you were a good business before, can you get back to being a good business, and what can you manage to service? So even though your requirement might be a little bit more, the banks are probably going to pull back a little bit in terms of what they actually release to clients, because you've got to be able to service it.
And in terms of timing, today's Monday. If I'm an SME and I apply, what is Investec targeting as a turnaround?
So we're targeting around 7 days. Each bank will be different, depends on the tech that each bank has. I think that the transactional banks may be able to process a little quicker, because a lot of what they have to verify, like payroll, etc., run through their accounts. Investec's a little bit more complex, but on the other hand, we do know a little bit more around our clients, because our clients will generally be clients that we've lent to. So the scheme is catered for 80% of the retail bank's client base has no previous lending from them. So that is quite important to remember. But as I say, there's quite a lot of applications that the banks are expecting. We're asking for some patience. We will get to all of the applications. The window is open for 3 months, which is also an important part. So I think that businesses should consider timing when they make the application, for when they know what stage their own business will be able to open, so that they can get back on their feet. I mean, there are some terms around these loans. I'm sure you were going to ask a little later, is that the banks may ask the company for some security or for some guarantees. You are not allowed to use the loan to repay any bank debt or any other debt. You are not allowed to use, during the life of the loan, you cannot repay shareholder loans. You cannot declare dividends. So the idea is that, you need to pay the government first, because it is government guaranteed, before you can pay yourself, which we think is very fair in terms of the way that it's constructed. So you shouldn't try and take too big a loan that either you can't service or you're going to battle service, because it will have implications down the line when your business gets back to normal. You need to take what you need to keep the business open, to keep the doors open, and to ensure that you can continue to employ people in South Africa, because I think the consequences of mass unemployment, as a result of this COVID, could be potentially catastrophic for South Africa.
And Adam, there's obviously a little bit of a margin involved in these loans, but there, on the other hand, is a guarantee from National Treasury. How does that margin work in respect of the banks profiting?
Yeah, well, there's actually no profit to the banks at all. Essentially, the banks will lend at a particular rate. The Reserve Bank will charge a guarantee fee. The banks will notionally make a margin, but those will be your first 2 losses. Then the banks will step in and make a loss, and then only the taxpayer or the Reserve Bank will be called upon. So there's quite a bit of buffer. If the bank is left with surplus, which we highly doubt, in all of the stress testing that the banks have done, the banks expect to lose a substantial amount of money, and the SARB maybe a little bit of money. And if there is anything left over, that will be returned to the SARB to offset against other debts. So some banks may not lose, but there won't be any margin made by the banks. That's one of the key points of the scheme, and there also won't be any fees charged to the client.
And Adam,
maybe it really is a proper bailout package. There is no margin at all. I know the US banks made in the region of $10 billion of their scheme. There is zero margin for the SA banks.
Maybe just in closing, if I'm an SME that has applied to another COVID funding scheme, for example, TERS, can I still apply under your COVID-19 loan scheme?
Yes, you can. However, you can only get one loan from one bank, and you can only apply once. So if you apply upfront and then you work out in month 2 or 3 that you haven't applied for enough, there is no option to go back. So you need to carefully consider that and discuss it with your banker. As much as possible, you want to be able to make sure that you've applied for the right amount. I encourage people not to take additional if they don't need it. This is not an exercise to refinance your business with potentially a cheaper loan. The idea behind this is really emergency funding for the businesses that need it most. And again, I'll say it again, to keep your doors open. We need to keep businesses in business, and we need to keep employees employed. That is the key responsibility. We have a social and a moral responsibility as business people in South Africa, to ensure that to the best of our ability, that is possible, and this is what it's designed for.
Adam, just finally, how do I go about applying?
Yeah, so each of the banks are going to open up. There will be online application. It will either be a form that you download, or some of the banks you'll fill it in online. I think they'll give you an indication of how long the application will take. There is obviously documents that you're going to have to supply. From our point of view, the more you can supply, the better it will be, and the smoother your process will be. You'll have to work out what you think you need. You'll have to justify why you need it. You'll have to give management accounts, etc. So it's kind of the usual stack when applying for a loan. And as I said before, you may be required to give security or to sign personally.
Adam, thanks so much. We really appreciate the time.
Great chatting. Keep well.
Adam Orlin, the head of Investec for Business.
Great. Thanks, eh?